Hello, everyone. I am Alicia, your AI host. Welcome to Researchfin.ai video tutorials. In this tutorial, we will take the example of a simple bullish reversal strategy to demonstrate how one can research, develop, backtest, and deploy simple strategies using Researchfin.ai. First, for those who are not familiar with Researchfin.ai, we are on a mission to make trading accessible and easy for everyone. Our beginner-friendly, all-in-one trading strategy platform offers a comprehensive set of tools and resources for researching, developing, and deploying trading strategies. With our unique, no-code strategy builder, you can easily create and backtest strategies without requiring any technical skills. We believe that anyone can become a pro trader with the right tools and resources. Our platform is based on systematic trading, which eliminates emotional and psychological factors that can hinder success. We provide trading strategy templates that traders can easily modify and adapt to suit their needs. Our platform is cloud-based, which means it can scale really well to support dynamic, rule-based universe selection in trading strategies. We provide a rich set of functions to define any kind of trading scenario. We're excited to be revolutionizing the trading world and can't wait for you to join us on this journey. Now let's start with the tutorial. Here is a trading strategy editor on Researchfin.ai. A trading strategy comprises three key components: the setup rules, the entry, and the exit rules. The setup rules define the criteria that an asset class, like stocks, would have to meet to be considered in the universe of stocks to trade. They are like pre-filters that help generate a dynamic universe. The entry rules define the criteria when met we would enter into the trade. Similarly, the exit rules are criteria when met we would exit from the trade. The strategy rules can be on any bar granularity level going from minutes to daily, weekly, and monthly. But for this use case, we will go with daily. Also, the direction of the strategy can be long or short. Defining the strategy rules is very easy. We provide a rich set of functions, attributes, and indicators that you can use to build almost any strategy you can think of. There are also several criteria templates available to help you get started. In the interest of time, I have already pre-created the strategy rules for the bullish reversal trading strategy and will walk you through them quickly. For the setup rules, I would like to define the universe as stocks that have had 2 consecutive red or solid bars. This condition checks if the current bar is red, and the next one checks if the previous bar is also red. In addition, I want the current red bar to have made a 20-day low. I check for that here, where we want the current bar low to be lower than the minimum low of the previous 20 bars. While this should ideally suffice, but I want to make sure that I am only trading stocks that have liquidity and also are not penny stocks. So I check if the 20-day average volume is greater than 500,000, and if the 20-day moving average of the low is greater than or equal to 10. I feel that this is a good set of criteria for the kind of stocks that I want to trade and the setup I am looking for. Now let's look at when I want to enter into a trade in my entry rules. Here, I specifically want to enter when there is a green bar that follows the 2 consecutive red bars. But I want the green bar to be such that it makes higher highs and higher lows. Also, the green bar should open above the previous day open. In addition, I want to take the trades only when the previous red bar made a lower low and a lower high compared to the red bar before that. I have kept the conditions intentionally a bit strict, as I want to increase the probability of success by ensuring a good quality reversal bar. This will take the position on the next day market open after the green bar, since I am working with daily granularity bars even for my entry rules. Finally, for my exit rules, I want to have multiple conditions that would trigger an exit. This is to ensure that I am balancing the wiggle room for my position, but at the same time, maintaining tight risk management. So my first criterion is that I want to exit if the bar makes a new 20-day low, as this shows signs of weakness. My next set of criteria is that I want to exit whenever it is a red bar that closes below the previous day's low. This again shows signs of weakness. And my last set of criteria is that if there are two consecutive red bars with the current red bar closing below the previous red bar's close, then too, I want to exit. Just like my entry, the exit will also happen on the next day market open after the day when any of the conditions are met. This is because I am using daily granularity bars even here. Great. Now that we are all set with our strategy, it is time to backtest and analyze the historical performance. You can run custom backtests on any historical time frame. By default, the system generates the latest 3 months, 6 months, and 1-year backtests. The reason for this is that the market regime constantly changes, and it is important to gauge the recent performance of strategies when deciding if the timing is right for its usage. You can trigger a backtest run anytime by clicking on the Run Backtesting button. In the interest of time, I have already generated the backtest so that we can directly analyze the results. Researchfin.ai shows a few useful metrics that help analyze the effectiveness of our strategy. First, we can see how many trades the strategy generated in a given period. Too many trades mean that the criteria are too loosely defined, and too few trades mean that the criteria are too strictly defined. Here it shows 287 trades in 3 months. This is neither too many nor too few. Next is the win rate. This shows how many of those trades generated a positive return. A 50% may not seem like more than a coin toss, but the win rate alone doesn't give the true picture of the edge. This is why we need to look at other metrics in combination. The profit factor is the ratio of the average profit of winning trades times the probability of winning or the win rate by the average loss times the probability of losing, which is 100 minus the win rate. This gives the idea of the edge that over the entire span of trades, what would be the profit generated to the loss incurred? If this number is greater than 1, then the strategy has an edge. The average holding period shows how long the trade is typically held. As these are short-term swing trades, so the holding period is expected to be less. The reward-to-risk ratio shows the average profit to the average loss seen across the trades. This gives an idea of whether the strategy has adequate risk management and a suitable return potential for the risk taken. We would want this number to be greater than 1. Expectancy shows the average return per trade that one can hope to make. If expectancy is positive, also called a positive expectancy strategy, then one can hope to be profitable over the time period. Kelly's percentage is derived from the famous Kelly criterion. This was created by the American scientist John Larry Kelly Jr., who worked at Bell Labs. It is a formula that determines the optimal bet size or position size for any strategy. It was made famous by Ed Thorpe, who has successfully used it both in the game of blackjack and the stock market. There are also claims that other famous investors like Warren Buffett and Bill Gross also use Kelly's methods. Here it shows the optimal portfolio percentage one should allocate to this strategy. The value at risk for 95% shows the maximum loss per trade seen on 95% of the trades in that period. This is also a measure of the expected risk level seen in any trade of this strategy. Researchfin.ai also shows the probability distribution of the returns seen. This helps get a visual idea of what to expect in the trades. Finally, we can see the list of historical trades. Let's select one of them to load the chart to visualize the entry and exit. Here we can see that the position was entered on the next day market open after our criteria were met. We can also see the exit after the criteria were met with about a 21% profit here. You can sort the trades by the return to see the absolute best as well as the absolute worst trades. While profitable trades are a great confirmation, it is more important to study the loss-making trades to understand if there are any visible recurring patterns that can be added as additional criteria to the strategy. Now let's understand why looking at the recent timeframes can give us insights. Here we can see that the metrics were relatively weaker when we moved from the 3 months to 6 months backtest. It is further weaker when moving to 1-year backtest. What this tells us is that this strategy has performed relatively better in the recent 3 months. This is again expected, as it is a reversal strategy that works better when the market is ranging. But then we can run over a longer time period, like, say, 10 years, to understand what is the general performance of the strategy and does it still have an edge and positive expectancy over a longer time period. Now, this looks pretty satisfactory to me. So to use this strategy, I can go back to the editor and deploy. This will now generate the setups, entries, and exits regularly once deployed. This I can then use to trade. It will also generate notifications so that I can quickly take a look at any new entries or exits. With Researchfin.ai, I can go from creating and backtesting to deploying strategy easily. And I didn't have to write any code or deal with any infrastructure or other technical things. I could focus just on my strategy hypothesis. Pretty cool, isn't it? With Researchfin.ai, you get to trade smarter and not harder. So go ahead and start forming the hypothesis for your trading strategy. By the way, if you haven't already signed up for an invite, please do so on our website today at www.researchfin.ai. We will be launching our product soon, and we will send you the invitation when we do. Thanks for watching this video. See you soon on Researchfin.ai.